Hello, Sky Traders. Welcome back to a new YouTube video. This is Mina, your trading coach. And yeah, it's been a while since we're having our last recap. But here we go again. We're coming with a forecast. We're going to analyze what happened over the last week and what's likely to happen over the next week. This is the Bitcoin dollar chart, and this is the weekly recap. So without further ado, let's get started. As we usually do, we try to understand the behavior of the market makers, which is basically the sentimental analysis. Combine this with what's happening with the fundamentals, like any kind of interest rate releases, CPI, any kind of fundamental data that we can depend on to give us an overview of what's happening in the global economy. Combining both, looking into the charts, trying to understand price action with the technical analysis, we can formulate a trading bias. This is how you should enter a trade. It's a hierarchy, right? The first level is to try to understand the sentimental analysis. Start to know how the big whales are thinking, how they're considering the market, and what's their short and long-term positions. Second step is to look into the fundamentals. Interest rate data, CPIs, inflation rate, unemployment rate, any news happening to big exchange if it's crypto, any news happening to US or Europe if it's Forex and you're trading, I don't know, pound dollar or euro dollar, whatever. So it's basically looking into the fundamentals to understand the overall view of the market. Then comes the third step, which is looking into chart, understanding what's going on, trying to highlight important areas on the chart, and understand the price action, the price delivery conditions, which we discussed several times before. And you're going to get this feel that I depend so much on this because this is the basic, right? Once you understand the basics, it's so easy to interpret the chart. Combining all of the three gives you not a trading setup, not an entry, it gives you a bias. A bias means, all right, now my bias is that Bitcoin versus dollar is going to increase or decrease, or I'm sideways, or I'm just waiting for a specific confirmation to happen so I can find a good entry point. That's the bias. A lot of traders fall victim to this mistake, that even if they're combining all of those three aspects, which by the way, not all of the traders do, they come up with a trading setup or an entry, not a bias. And here's the problem. I'm spending so much time on this because it's a real problem. And once you understand it, you're gonna scale up your trading plan and execution. So back to the point. If you come up after doing the sentimental analysis, fundamental and technical analysis, you did the greatest analysis of all time. Now you know every single data about the market and you just decided to have a trading setup instead of a bias. If you have a trading setup after doing this analysis, you're gonna marry your trades, which means that, hey, I'm putting my stop losses in the chart, I'm putting my entry points. Now I don't have bias. Now I have trades. And once you have trades, draw them on the charts. They look so beautiful. And you see and try to manifest and imagine how it's going to be so great if the market hits your target or hits your points. You're just waiting for the market to do so, and you're not looking on any other thing except your trades. So you're going to marry your trades. But if you formulate a trading bias, it means that, all right, my bias is the market's going to go up, but I'm waiting for this to happen so I can take the entry. Or the market is going to go down, but I'm waiting for the market to break this level, for example, so I can confirm on my bias. Or I'm just sideways. I don't know. The market is consolidating, so I'm just going to wait until we break this consolidation area. So having a bias, now you don't have trades. You're looking into the market from a fair point of view. It's just that you have the bias to buy, so you're looking for the market to do specific things to confirm, or to have the opposite. That, all right, I was wrong about my bias, or my bias was not right. This is really important. And that's why I try to really include some info or knowledge in the videos. So it's not only about forecasting and saying, hey, yeah, the market's going to go up or the market's going to go down, or drawing some trend lines. It's about giving some knowledge during the forecast or recap. So it's adding value to your trading. And it's not only about following my trades or giving you signals. We don't go give any kind of signals in here, right? We try to give knowledge. So let's try to apply this to the forecast of the next week. Let's remove the drawings and see. This is basically the 4 hours time frame. And I would like to highlight this area. We're having a consolidation phase followed by an expansion, and this was a bull trap. We consolidated, right? Then we tried to break this consolidation to the upside, but we failed. Market dropped, hitting the previous stop losses of buy orders here. And this result in short-term reversal from these orders, hitting the previous stop losses of sell orders with an order block, consolidation, and then further drop to the downside, breaking this marked structure, right? Now, this also is a critical area. Why? Because these are the stop losses of the previous buy orders of the whole consolidation block. We tried to hit this area. We reversed with a high buy pressure candle, consolidating, and this is where we're standing right now, right? This is interpretation of what happened during the last period. All right. Let's jump to the 1 day time frame so you can see this on a higher scale, right? This consolidation, this trap, and this trap is bringing liquidity from here, right? And trapping buyers. And if we consider this from a sentimental point of view, this is where buy trades are placed from retail traders, because they think, oh, it's a consolidation and then an expansion with this triangle or breaking this rectangle or whatever, all of these chart patterns, then they are placing more buy orders. But this is a possible area of order block. This is the end of the trading range that we've been trading since 5th of June 22nd. So it's a really important area. Trapping buyers. Let's remove the drawings again. Trapping buyers in here with a high pressure sell candle, breaking this market structure. Grabbing liquidity from previous stop losses of buy orders, trading back to the previous market structure, failed to break or to create a breaker block. So instead we created an order block. Trapping buyers again, breaking the market structure, trying to trade back in here with another order block. Now we're grabbing more liquidity from this area, rejection. And this is a very critical area in here. What's our bias? This is the question. First of all, sentimental analysis. Where is the liquidity going? Buy order flow, buy order flow, right? When was the last time that you saw a sell order flow like this one? It was during the peak of the bear market. Here, here, and here, right? I'm not gonna consider these or these because basically these were traps. This is not an order flow. So this is the first buy order flow since the beginning of the bear market. And this is the second. Is it considered a shift in the sentiment? Could be. So what are we looking for? If we draw the Fibonacci retracement from here to there, we're gonna find that in the first buy order flow, when we try to trade back, we hit the 50% Fibonacci retracement level at exactly 62%. If we're gonna do the same here, from here to there, and we try to hit this 50%, so either we're expecting another drop to get this buy orders that were previously placed at this mark structure and create an order block and then see another buy order flow. In case we tried to trade back in here and failed and rejected, or we're gonna see a further drop. And if we're gonna see a further drop, at least it's gonna be to this level. Why this level? Because this is where the previous mark structure was broken. Let me clarify this on the chart. This is the mark structure, right? This is the second mark structure that's been broken. This is the third mark structure. And if we're trying to complete or to take liquidity, this is the first area of liquidity, second pool of liquidity that we already hunted. This is going to be the third one, fourth one, and fifth one. This is the mark structure that we broke. If you're going to have a sell bias, what you're looking for is market to trade and fail to break this market structure, and don't fall victim because this might be a fake fall. Because sometimes what the market do is trade back, drop to convince retail traders that, oh, we're dropping, so I'm just gonna sell, and then break this market structure. And remember, we discussed a lot about this pattern, which is basically failing to take previous low or taking previous low and breaking the market structure. And then we can go up. In this case, if we see this, then we most probably are going to go up and target the next level or liquidity pool, which is going to be here around $33,000. Or if the market failed, broke this level, tried to trade back, and again dropped, we're going to hunt this level, and this level. And then we can expect reversal from these levels. So what's our bias now? You have to check on the charts, right? I'm giving you right now how to look in the charts, how to create your bias. What's the fundamentals going? Right now, the crypto hype is really high at its peak because of the meme coin season. And I would just like to add some points, important points, straight to the point regarding meme coins. Every single bear market, there is a meme coin season. You know why? It's not actually an accident or something that is extraordinary. It's because that every single season, we need to have some cash grabs. This is how market makers try to kick out all of the retail traders from having high positions in Bitcoin or Ethereum or stable coins. People withdrew even from Bitcoin or cashed out some Bitcoin and Ethereum to buy Pepe, to buy Sponge, to buy all of those meme coins, right? Because it's really good opportunity. I can be a millionaire, even not waiting till the next bull market. I can be a millionaire right now. So I'm just going to cash out from Bitcoin. And guess what? Hundreds of millions of these trades are liquidated over the past 2 or 3 days on meme coins. So every single bear market, there has to be something considered as a cash grab to attract all of this liquidity to cash out some high positions on Bitcoin, Ethereum, and stable coins and put them in meme coins. Sometimes people are going to make money, but the majority lose money. Because imagine, if every single day there is thousands of meme coins that are being created, there are even like some automatic tools right now that are creating meme coins on the fly. And if you're investing in every single project, or even like in one project a day and throwing hundreds of thousands of dollars from traders all over the world for just one or two projects to succeed and make it to the top, then it's a cash grab. So right now, fundamentally speaking and sentimentally speaking, the hype is there, but on meme coins. What does it mean for Bitcoin? What does it mean for Ethereum? It means that there are a lot of manipulation is going to happen during the next couple of days. So you have to practice patience, practice being cautious during these time of the market. Thank you so much for watching. This is Mina, your trading coach. Again, go and check your charts. Let me know down in the comments what do you think, what's your bias, and how you're gonna look and confirm on this bias during the week. Thank you so much for watching. This is Mina, your trading coach. See you in next videos.